Hey guys, it's Friday afternoon. Oh shit. Oh man, I didn't set this up right. Damn it. Shit, man, that's exactly where I wanted to get in. Wow, that's annoying. So, all right. Man, that sucks. Actually, it's not that big a deal. It's not that I didn't miss much here. So the high of this candle was 179.5. I was going to get in for the break of that candle, try to ride it back up and maybe more. And I would have sold half there, which wouldn't have been that much at all. It didn't really pop hard. Let's see. So let's see what some of these other guys are doing. These are all after hours top gainers. Some are, I mean, most of them aren't worth looking at because they have no volume. Trying to catch a aftermarket runner to possibly hold, through the weekend after securing some profit. So this is actually like a nice little 3-bar play. So if it breaks 187, I can get in on that. I'm sorry, if it breaks 186, if it hits 187, I could get in on that, and then I could sell out if it breaks that candle. This thing had a lot of volume early on in the aftermarket, but now it looks like it's dissipated. So I'm not sure if there's a trade here or not. So this is one of the first patterns I ever learned, which I guess you could also call like a 4-bar play, but essentially you get like a big engulfing bar, and then you get a little pullback, and it can even come all the way down to the bottom of this candle, and as long as it doesn't break that level, that signifies price strength, and you can get in, say, the first candle to make a new high, and ride it back up to the top. I'm not so sure that's really worth it here though, because the spread isn't really big enough to make a difference. It just looks like this thing kind of is fading away. The question is, with this nice consolidation, is it just going to keep consolidating until the market opens on Monday and then pop? Because that would be a worthwhile play. But I don't really want to buy it if it's just selling off. Because, it might just try to close this gap and end up right back down to 130-ish, which is a 50-cent loss. And if I have 4 shares, that's $2, which $2 is not a lot of money, but for my account, it is. It's almost 1%. I just want to see some signs of strength in this stock. see, maybe if it hits 183, it might climb back up. But then I want to hold it till like 174, the break of 174, which is reasonable, a 10-cent spread. That way I don't get out on a fake out. It's looking pretty weak. It's a lot more volume here right now. It's printing higher lows. Seems like it's having trouble getting over this 270 level. Good float size. If it hits 271, I'm going to get in on this. So that's like 3 retests of 270. So either it's going to break and run, or it's going to really sell off. I think it's more likely to sell off at this point. I mean, it looks like, yeah, the buying volume is not here. It could always like tap the 271 and then pop back down. SND isn't doing anything. Let's see what this Gril is all about. So this just popped up on my list. Now this looks interesting. Man, this would have been a good entry right there. 173. This one has some news. This would have been the ideal entry. But man, it's hard to catch these things. The thing I hate about this kind of trading is that you're just sitting here waiting for something to happen, and you're much more likely to enter into a trade that you wouldn't have because you feel like, I'm wasting so much time just sitting here. I need to be in a trade, otherwise it's a total waste of time. And I don't want to do that. See how far this thing retraces, because this looks like a 50% retracement, which is nice. So let's see if this candle breaks 178. I wish that the volume updated faster in Webull. That sucks. I got filled at 180. So this thing hits what's the low here? 174. If it hits 173, I'm out. But I'm hoping that it'll pop. Kind of sucks that the fill that I got there. So the idea was that if it breaks this level, then it's showing some strength. And yeah, I decided when I wanted to get in. I'm not sure. I guess there were just no shares available at that price. I basically got the +2, which that doesn't usually happen, so I can't really complain. But yeah, I tried to get in at 178, and I got filled at 180. But I probably wouldn't have gotten filled if I didn't have that +2 in there. So if this thing actually does run, it'll definitely be worth paying that extra 2 cents. I gotta watch to make sure that this thing doesn't come crashing down on me, because if it does, I gotta get out. And this is the thing that sucks about trading in the aftermarket, is you can't put any stop limits in. Everything is manual. So I just have to sit here and watch this. The only thing I don't like now that I'm looking at the 5-minute chart is I kind of bought in the middle of a 5-minute run. So that means that this thing might have not been done pulling back, which we're going to find out real soon, it looks like. So if this thing breaks this level here, I'm out. And then it'll be a 7-cent loss per share, which will be 28 cents. That's pretty reasonable risk. The thing that sucks when you buy into these retracements, these pullback retracements, is you don't know if it's going to go, if this is really like a retracement and it's going to keep going higher, or if this is like a pullback on the way down, on the backside. And that's why a lot of times I just like to wait for it to break the high of day. But I mean, they both have pros and cons, and I'm really like kind of torn between the two, because if it breaks the high of day, I think it's more likely. Well, then you're not in a downside pullback. Or sorry, a downtrend, a pullback on the downside. But at the same time, the stock has a lot more selling pressure at that point, and it could just pop up 1 cent and then flush down hard, and you got to get out, quickly. So when I buy, for the break of these 1-minute candles, then I feel a little bit better about sitting through, some churning, as long as it doesn't break my stop loss level. That was the first time we've gotten above my entry. So at least there's still some buying volume here. I figure out, where do I want to take half? Probably at the 183 is a good place to take half, even though that's only going to be like 6 cents. I'm going to take half there. And this just secures profits. This is more like a practice thing for me. I know like that's like next to nothing. I made like 6 or 8 cents there. But essentially what I'm doing is I am now allowing myself to stay in the stock longer with less risk. Because even if this thing now comes down to that 173 level, then 7 cents at 2 shares, that's only 14-cent loss, minus the 2 cents. Every time you hit the sell button, you get charged 2 cents from the SEC and FINRA. So this is what I wanted to happen. I just don't know if it's going to hold up, because now that I've taken some profit, my strategy is if it comes back down to break even, that I have to get out. And that's just to keep my losses super duper small. And yeah, so let me just keep an eye on it here, because it's pulling back again, which is to be expected. The thing that sucks now, well, I mean, if this is real support here, it shouldn't come down below this 182. I'm kind of like right at the support level. I should probably get out if it breaks the 180, like if it hits 179, because I'm like right at a support level here. So there's a better chance that this thing could come down to 180 and bounce off and go back up again. And if this thing just starts like heading up really high, then I'm probably just going to walk away. Well, let me get ready. It looks like it's about to tap me out. This could be a support level. About to find out how strong this stock really is. Now I like this. These buying numbers are nice and high. Just got to get ready to get out, just in case. So there, it hit my level and it bounced, which is good. That's what I want. But it still could come down. I have to be ready. If I see 179 over here, I'm out. It's kind of stalling, which I don't like. But I gotta stick to the plan. Nice thing is it hit this 9 EMA, which people could be looking at for support. I'm 1 cent away from stopping out here. As soon as I see 179, I'm out. Oh, getting attacked by the cat here. Whoop. All right, so it just popped. It popped down through my. Hopefully, I didn't. Yeah, I got filled at 178. So it just kind of gapped down. It never hit 179, so I couldn't get out where I wanted to. But that was the next best thing. And let's see if it broke even on that trade or made a tiny profit. All right, so we bought. Yeah, I was trying to get in, I think, before that, but anyway, okay. Yeah, so it looks, yeah, okay, yeah, I mean, it's a tiny profit, but still a green trade. And I'm glad that I didn't wait, you know, because then I probably would have erased all of the tiny profits. So here we got in at 180, it went to 184, and we sold 2 shares. So that's 8 cents minus the 6 cents, minus the 2 cents for selling it. So we're up 6 cents there, and then we sold 2 at 178. So we're down. Yeah, so it's a break-even trade. So we came down and sold it for 2 cents times 2 is 4 minus the 2-cent charge, 6 cents. So it was a break-even trade, but you know, it was worth a shot. I was trying to catch one of these runners in the aftermarket, and you know, ride it through the next market open, essentially, or the next pre-market at least. So anyway, it didn't work out today, but it also wasn't a loss. It was just a exactly break-even trade. I didn't make anything and I didn't lose anything. And I think these are really worthwhile to try, because it's interesting to note too. Remember what I said to get in over here? This is why you want to sell half your shares, you know, when these things pop the first time, like maybe here. And if you have enough shares, you can sell half again, you know, for the next pop, and then just hang on to half or a quarter of your position size, or even, you know, if you sit in it for a long time, you might want to sell all but like a tenth of your position size. That way you can just walk away and let the thing play out and come back to it the next day or whatever, and you're not worried about losing all your profit because you've already taken most of it. Because look what happened here. Now it actually came down below where my break even would have been if I would have got in here. So anyway, the long video, but this is something I've been working on lately. I did this yesterday too, and it worked out for you know, like 15-cent profit per share. Today it was just a break even, and I'm gonna keep trying this because the beauty of this is you can get into these runners when they're really cheap. So and this thing might pop up again on Monday and take off, but you know, you got to stick to the plan. You can't hold and hope, and you can't say, oh well, I'm just gonna let, you know, this thing get away from me and lose all my profits for the hope that it does take off on Monday. You just don't know if that's gonna happen or not. So anyway, I hope this video was helpful. Please like, share, and subscribe, and let me know if you have any questions. Take care.